Welcome to Markets Now. I'm Michelle Rook along with Kevin Duling with KD Investors. And we are seeing livestock and soybeans lower with corn and wheat to the plus side as we move through the mid-session. And let's start off talking about corn and wheat, Kevin, because corn market seems to be getting a little help from the wheat market, but maybe is also putting a little weather premium in.
Yes, I think so. And you've got a pretty big tug of war technically in corn right now. If it can close, the July can close um, over that 575 area. I think you're going to see, yeah, it's 577 now. So I mean, if we can close here, that's going to be a big technical gain, and there's another little resistance above it. So but yes, the weather premium. People are nervous about the weather pattern shaping up in the U.S. and I think there's also a little bit a premium coming in from South America and the Brazilians. They've got, that second corn crop's been dry and going to stay dry for a while. If you recall, the last 30% of that crop planted, 15% of it was planted late. The other 15% was supposedly going to move into other crops, such as forage crops, that just get the biomass because they didn't have time for corn. And so there's not a lot of wiggle room there, not a lot of wiggle room in the whole world balance sheet. And so the market's going to be very sensitive to any weather event at all. And the U.S. pattern is a little concerning. It's too early to get, to fret about it. But, the times when we've had big trouble in the Corn Belt, we've been moving from a Nina pattern to a Nino pattern, and this is the pattern that sets up. You get the kind of the hot ridge over part of the Corn Belt, and it's May, and so it's not the end of days yet. But if we see that can move into mid-June, then we're going to have a problem.
You bet. But it doesn't feel like we have a lot of weather premium in the corn market, though. The wheat market, obviously, like I said, is helping out corn here today. And the wheat rally, talk about that. We have some global supply concerns again here with Ukraine. One of the ports has actually been shut down kind of here by Russia again. Get us up to date on that.
Yeah, it sounds like that there was a naval blockade of one of the big deep sea ports. I'm not going to try and pronounce the name, but it's a 10 to 12 million metric ton a year port, and so it's significant. And if it's hard to. I mean, I'm not going to try and guess the politics over there, what's going to happen, but if the rumors are true, I mean, and Ukraine was trying to occupy some Russian villages, Russia's going to respond, and I think it's even though the deal was signed, the corridor was extended. It's only a 60-day extension, and it takes 40 days to get in and out. So technically, it's only a 20-day extension. And so if you look at the pace of loadings and shipments, it's way down in May, and it's going to be way down in June. And with this naval blockade, you make ship insurers nervous. I mean, it's the same story we've been having all year. And I don't think Ukraine has a lot left to move from the old crop. A new crop's going to be smaller. So, I would think there'd be some premium in the markets for this. But they're still selling. It's amazing to me. We see that news and we see the weather, weather problems off and on here, just about everywhere. And yet they're still selling coming into these markets. I mean, we're up to date double figures, but this morning we've had quite a roller coaster ride with some pretty heavy sell orders. So who or what they're selling that, I question why.
Yeah. So do you think we also need to be putting more weather premium into this wheat market, both from a U.S. and a global perspective?
I think so. And the reason why, I mean, this is our fourth year in a row with production below usage on the world stage. And then you've got lots of, you've got a large soft red crop coming. You've got a large EU crop coming. So those, that's where the big supplies are. And then, you may have a large Russian crop coming, but that whole eastern half of Russia is under a big ridge of high pressure, and nothing looks like that's going to change. And so that could drop their production. The Chinese have had a real roller coaster of temperatures and some freezing temps. And so that production's in question to me. The Australians, the western half of the Western Australian crop, I'm sorry, not the western half, but the Western Australian crop, half of that is having trouble getting seed to germinate, and they're running out of time. Same with Argentina. Pacific Northwest here is too dry. Yeah, I really don't. I think there needs to be some weather premium in this market. Like I say earlier, I'm not sure who the sellers are, why they're pushing so hard right here. So
Yeah, man, the funds have just been relentless, especially in Chicago wheat. The soybean market, we are seeing what, some profit taking today, or is there more to it than that?
yeah, I don't. That'd be tough to call. There's really no good stories, no big stories in soybeans to propel them higher.
True.
Bears have made some money, and so probably using yesterday's gain as a time to establish some more positions. But in my opinion, if we can hold where we're at, I mean, we're down 2022 this morning. If we can hold in that range and not make new lows, maybe they're going to start laying off the sell side for a while. Maybe we can start building a base down here at bottom and get ready for the weather season, be my guess.
Yeah. The meal market, the oil market also down, probably some profit taking there. And so that is probably a drag. I also wonder, are we seeing maybe some money flow issues? Seems like soybeans, especially the livestock sector, cattle in particular, have been really sensitive to these debt ceiling discussions and where they're going.
Right. I mean, that's been the backdrop of this whole marketing year for all of us is, we've got some pretty exciting uh, fundamentals, but at the same time, you've got kind of a global economic crash going around us, and the debt ceiling is silly. I mean, everyone says they'll extend it, we'll be fine, but at the same day, it requires more printing, requires more debt, requires the reason we're here in the first place. So there's nothing good about the macro that I can see. There's some smart people far above that I talk to, and they say, oh, everything will be fine. We're going to have a soft landing, nothing to worry about. But in my little simple mind, I see a lot of things I like to worry about. So I just we'll see how we go. But yeah, it's not going to allow the livestock markets to perform as well as they should, given the supply and demand numbers. And I think people are stretched for cash. And I think it's headwinds, and so it's still a strong market. I don't see it falling out of bed, at least not yet, unless we have a corn problem this summer. But we certainly have, like I say, I think we should stay in this range for a while.
You bet. Oh, and what you mentioned about the macroeconomic picture, boy, that has kept a lot of these funds either on the sideline. The money hasn't been either coming into commodities, or they're doing like they are in Chicago wheat and just pushing that thing short, that and like hogs, right?
Yep, that's the play. And when you get these smaller markets like Chicago wheat,
Wow.
they can't handle that kind of selling. Corn and soybeans can absorb it, wheat can't, and so you get some pretty big moves. But at the same time, we need to feed some soft red. We need to feed some EU milling wheat, or not milling, but EU soft wheat, and so it works in that regard. But longer term fundamentals are going to have to play out, and we're going to see the premiums build back in.
Yeah. One thing I want to go back and ask you about, Kevin, and you kind of just tipped it off. We've got some European wheat that's being imported into the United States. That certainly has not helped the psychology of this market overall, right?
No, you always get those big headlines anytime we import some wheat from Europe, and it seems to happen every year. I think it's a little different variety this year, so it's a little different. I mean, we typically, the poultry sector is bringing in wheat from the EU or feed grain from the EU just because it costs so much to rail it from the eastern Midwest to the East Coast. It's cheaper to bring it over by boat. So, that it's never a shock to me when I see that. But in this case, it's a mill looking for milling wheat. It just kind of shows you how much wheat supply we have in this country. We really do not have very much hard wheat on hand, and and so we're trying to get it anywhere they can, and it's interesting, and that's why you have such a spread between the soft red and the hard red. It's just, and that looks to continue.
Yeah,
So.
I know it widened out historically wide last week, and maybe they're trying to pull that back in, but very interesting to watch. All right, thanks for joining us, Kevin, dealing with KD Investors. That's Markets Now.